digital payments for the first time leading up to the FIFA World Cup. Mainly because, like I said, they primarily use cards, credit cards or debit cards or cash. But Mexico is different again because it's a digital native population we have here. So instead of 85%, it could be 50%, but it will still be a big driver in terms of digital payments in Mexico. The number of payment terminals, the SMEs, the infrastructure for small businesses, all of this is another area of investment that could change the way fintech works in Mexico in the next 2 years. So based on the research we have seen in Qatar, we genuinely believe that Mexico will see a big fintech boom actually in 2025, 2026. And esports, like I said, is growing significantly as well. So I believe these are two areas where we're going to see some interest in fintech in the next few years. Now, why do I talk about collaboration and ecosystems, as we call them? The big challenge with every bank in the world, I don't know if any of you work in banks, maybe they're all in the other room, but if you work in a bank, you know the problems that you're facing. One, drop in fees. The fee revenue is completely going away. That almost 30% of revenue around the world is now impacted by fintech. So banks are competing with fintech for customer acquisition. And very few banks have a proper digital strategy in place. Everyone says there is a digital strategy, but very few have an actual, properly strategized digital strategy in place. And only less than 20% have started implementing their strategy. So you find a lot of banks in Mexico, in Colombia, in Argentina, for example. When I talk to them, they say, we have a strategy, but it's not being implemented fully yet. So we have a problem in terms of banks trying to do this themselves or by themselves. We did some research, again, around the world in terms of what do consumers actually want, or what are people talking about. So these are the hot topics on social media. So this is not real conversations, but social media conversations on Twitter, on Instagram, and on LinkedIn. And in South America, we found something very interesting. Most of the people talk about compliance, regulations, the regulatory sandbox, especially in Mexico, cloud-based infrastructure, the central bank activities, central bank digital currencies, RegTech or regulatory technologies used in insurance. So South America is quite, they want more stability compared to, if you look at Asia, for example, it's all about cryptocurrency and KYC, biometrics and all of that. And same with Australia. The hot topics are AI and blockchain. But I think South America is talking about other things that bring stability to the markets. And the regulatory framework, of course, in Mexico, we keep a close eye on it because the first one, the regulatory framework. And we have clients in South America who actually ask us about what Mexico is doing so they can emulate that. The partnership numbers are still very, very low. And as you can see here, a lot of the people talk about partnerships and sandboxes, which is a collaboration. But at the end of the day, the number of partnerships is very, very low. By the way, this is a global number, not one country. We had one partnership between banks and fintechs. And this is a database of the tier 1 banks, not tier 2, tier 3. So we had one partnership from a tier 1 bank in 2018. It was actually better in 2017. And then during the COVID years, it again slowed down. But now, in 2020 to 2022, we are seeing a lot of partnerships come about. So if tier 1 banks are doing it, and typically they're the last ones to do it, it's a good sign. We've also seen a lot of new digital banks being launched. And the largest number of digital banks were launched before 2019, pre-COVID. The number of banks have come down significantly. A lot of them have gone out of business. But I believe, I hear, I'm not sure if it's true, that Mexico is now looking at least 4 to 6 new challenger banks or digital banks this year. If that's true, it's going to be one of the largest markets for digital banks. So the traditional banks, of course, are suffering from a drop in revenues, drop in fees, customers being acquired by fintechs. And 62% of banks in Latin America are actually worried about the competition from fintechs. In UK, less so, because UK is a very, very high street bank, traditional bank country. Only 3% of people switch a year in the UK. But Latin America is different. So they are ready in terms of partnerships or in terms of customer acquisition with fintechs. And I think that's a really, really good place to be in. The other thing I see in Latin America, and this is observed all over, let's say Chile, for example, Colombia, Argentina, and Brazil, where the big techs, the Amazons, the Googles, the Apples, the Facebooks, the big technology companies, they have a play. And it's a long topic. I could talk for 1 hour on that. But the main play they have is in partnership with telecom firms or fintechs to launch a new product in the market. Sometimes they partner with banks and telco and fintechs at the same time. So they tend to go in with a new digital product, usually around lending, so microloans or lending. And they usually target millennials or Gen Z, as we call it, those born after 2000. So it's also an interesting market for us to watch out for in Mexico. As you might know, in the Chinese player, which is it's one of the largest companies in the world, Alipay entered the Mexican market with a partnership. And it's, again, a payments partnership from a digital product point of view. Tencent, another Chinese company, entered into the Brazilian market with Nubank, which also plays in Mexico. So it's interesting to see how social media players are going to enter this market as well. I personally believe Latin America is really, really hot for digital banks. And I think in the next 5 years, we're going to see quite a few new digital banks come about. We see quite a few people or new banks that have come up in Brazil, but I think Mexico is going to overtake Brazil next year, if my prediction comes correct. One of the things that we also find, like I said, is the interest rate is quite high in Mexico, which will reduce in the next few years. So again, it will come on par with some of the other countries in terms of new fintech players and new digital banks and new product offerings to the market. Of course, there's a whole unbanked and underbanked population in Mexico. Around 50% of population is unbanked. Now, having a bank account doesn't mean anything. You can have a bank account and you may never use it. So having a bank account is not a good metric, in my opinion, for judging if banks are doing well or not. So we have something called the underbanked population, people who have a bank account, but they never use it. They don't do savings on it. They don't do investments on it. Maybe they have a current account. Maybe they have a card. So the customer experience is based on basic transactions, which is not helpful to banks. So again, what fintechs do is play on the opposite side, is they invite you to come in with basic transactions and say, we only offer a current account. Please come and have the current account, which is completely free, and you get a platinum black card. You can use it when you travel. Foreign exchange is free. So those features entice you in, but then they build upon it, which is the opposite of what traditional banks do. They have so many offers, they sell it, but the customers don't actually use it, which is what happens with the underbanked population. So I genuinely believe the digital banks in Mexico, for example, or in Brazil, will actually have a much better customer engagement, especially with AI, in terms of this problem that we find with underbanked segments. We also find a lot of partnerships being formed. In the UK, most of the partnerships are between challenger banks or digital banks and traditional banks. So for example, Santander Bank and Lloyds Bank have around 600 people sitting in an office just for partnerships. Really, really big. They spend their time scouting for fintechs. They sign partnerships, do use cases with fintechs. So they are big in terms of partnership opportunities. In Mexico, I haven't seen that scale yet. Again, you can correct me, I should not be talking about Mexico, you probably know the market better, but what I find is banks don't want to partner that much. They don't actively look for partnerships. Sometimes they do. If you find a big success story, they want to partner, but if not, they don't. In fact, the regulatory framework in Mexico is one of the first ones to come up with a fintech framework. So it was quite interesting. Like I said, a lot of companies and regulators in Chile and Colombia actually look up to Mexico in terms of the framework they've created. Mexico was also the first country to have a regulatory sandbox, which is doing quite well in Latin America. And they're also the first ones, I believe, to have a cryptocurrency regulation. So it's partly fear, but it's partly to support innovation. So it's gone good in terms of what fintech regulation stands here in Mexico. Now, the next trend I want to talk about is SME lending, which I believe is going to be another big area of growth. So if there are any people in the room looking to launch a startup in the next 5 years, or any entrepreneurs, I think you should start it in lending and SME lending. So that's your big opportunity. It is a big, big, big underserved market. So traditional banks have less than 10% penetration into SME lending. Fintechs are actually getting there. So out of $1.2 billion in lending done last year in microloans, just microloans, 25% of the market was held by fintechs. And there are other players, non-banks, non-fintechs, who also hold a substantial part of the market. There are some very interesting companies and startups who play in that space. So this, I believe, is actually going to be one of the biggest markets in terms of growth for Mexico. In the UK, just to give an example, we have much, much smaller markets. We only have 1 million people who have taken loans in the COVID year, 2021. But one of the biggest shifts in lending was in terms of COVID, mainly because a lot of people took loans for very, very low rates. And in the UK, the rate is it was 0% for a long time. And it was less than 1% for even longer. So we have very, very low interest rates. So lending became very, very popular in terms of an opportunity for fintechs. I don't know if you've heard of a digital bank called Starling Bank or Monzo in the UK. So Monzo and Starling Bank are 1 and 2 in the UK. And Starling Bank suddenly became profitable in the middle of COVID. And that's because they have lending platforms and they made partnerships with lending companies. So loans was a big profit margin for digital banks. There are lots of examples of banks partnering with lending companies. You might have heard of Cabbage in the US, big SME lending company. So there are a lot of product partnerships being held. And Cabbage has an interesting model in which they actually partner for products. So they bring their product into the traditional bank, and that's the partnership. On Deck, another famous American company. So the partnership with On Deck usually is about credit scoring. So we don't use methods of credit scoring like your salary or your age or your address or where you live. It's about what your behavior is. So we find a lot of behavioral data being used for lending nowadays. For example, the moment you download an app on your phone, it can look at all your data. How many apps do you have? Do you have apps of banks on your phone? What do you say on social media? Do you use bad words on social media? Do you say bad things on social media? So your credit scoring is actually based on your social media activities, the apps, and your behavior with your phone. For example, if your battery is never charged fully, you're a bad customer because you're risky. So all of this behavioral data feeds into your credit score with fintech companies. And that's the kind of partnership that banks are doing at the moment. The next big trend, I believe, is around infrastructure. Again, it's a boring topic on fintech, but it's necessary. I think in Mexico and in Latin America in general, the next big investment will be on payments infrastructure. So moving payments to the cloud. Cloud is a huge topic in Mexico at the moment. Wherever I go, I hear that. A regulatory framework in place, which is already getting there. Support for open banking. Again, Mexico has done that. The support for open banking frameworks have been pushed through, and that encourages partnerships and APIs and embedded finance. And finally, your cross-border payments become more efficient, cheaper, and faster. So the payments infrastructure, again, I think Mexico is in a place where the regulations will now drive it forward. And as you can see, the biggest revenue in payments actually comes from consumers in Latin America compared to banks. So B2C, not B2B. But in Europe, it's B2B primarily. So again, consumer focus through fintechs is going to be a big opportunity here. I don't know if you know the term embedded finance, but it's again a huge, huge topic for everybody around the world. I think Africa, Asia, and Latin America are going to be the leaders of it. So embedded finance is essentially bringing all of the players from different industries together, along with data, the consumers, the product, and the platform provider in one place. It's a powerful, powerful ecosystem. So it's the ultimate example of collaboration. So essentially, it could be different companies doing all of this. Data will come from one company. The product creation will come from another company. Maybe the platform comes from Google. Maybe the players in the platform come from banks. So it could be any number of partnerships being formed in one ecosystem. So the customer just sees one finance offering, but it's actually provided by 4 or 5 different people. An example is Uber. So Uber does that today. So if you have an Uber account, let's say you are a driver, you drive for Uber, and you have an account, you essentially connect with fintechs, banks, and external companies like Shopify. So you want to connect to the bank, let's say to take a loan, maybe as a driver, to buy a new car. You connect with the fintech, maybe because the fintech is offering you a better deal, or maybe the fintech offers you data charts and visualization and things like that. And you also connect with Shopify, let's say, so that some people can pay bills through Shopify. So you can connect with any number of companies and banks and fintechs through APIs. And again, that's a powerful ecosystem when you think about this. Big techs, again, like I said, they are entering into the market in a big way, acquiring companies, partnering with companies. Facebook is giving loans to SMEs in a big, big way. So that's going to be the big competition in Mexico for fintechs. Open API collaboration, like I said, the moment you brought in open banking, it's about collaboration. So banks and banks collaborate with each other. You have product functionalities in banks being offered through APIs to fintechs, to regulators, to customers. You have developers using new technologies and products through APIs. And of course, you have things like documentation, clarity of documentation. The regulators actually looking at things with the help of APIs. So open banking actually is, I'm sure everyone knows the concept, but it's actually a very powerful concept in collaboration as well. Now, what kind of data feeds into this? So like I mentioned, it's not just about your age or salary anymore. Not in payments, not in lending, not in digital wealth or advisory. What we find is that a lot of the data now comes from sensors, for example. So in the UK, most rental companies, they offer you cars at a good rate, but your monthly rental is based on how you drive. So you have dash cams, you have sensors on your braking, your acceleration. So the sensor from the car will feed data to your insurance company. So your insurance amount is based on how you drive the car, whether you're a good driver or not. Same with health apps. I'm sure you know about health monitors, smartwatches. It can monitor your heartbeat, your blood sugar levels, diabetes, cholesterol, anything. And again, that's a huge market for insurance providers. A lot of insurance companies now use that data to offer better rates. If you walk 10,000 steps, then you get a better insurance deal. You get data from geolocation. You walk into a shop. Let's say you walk into Starbucks, and the data knows that you spent $5 in Starbucks, or £5, I don't know how much it is in Mexico, but around $300, $400 in Starbucks for a coffee. And they will tell you, or they will give you offer the moment you walk into Starbucks and say, you usually spend $400 in Starbucks. Would you like an offer for $500 but 2 coffees? So you can actually sell products, loans, and your budgeting based on your location. And geolocation data is quite commonly used for that. Satellite imagery data is now widely available. A lot of people track planes. They look at farm. They look at rainfall. Is the farm green or brown? All of this can be done with satellite data. Drones. Again, drones can go into places humans can't. If there's a fire in the building, in Europe, most of the damage survey is done by drones. No human goes inside damaged buildings anymore. So in the insurance world, no humans go out to check for damage today. Same with agricultural insurance. So if there is damage in the crops, or there's a big land that you need to insure, they send out drones. Again, humans don't do that anymore. Then we have website data. So a lot of web scraping and social media data. Like I said, what do you say on your social media? What kind of words do you use? All of that is also taken now for data. Devices like your mobile phone usage, your behavioral metrics, your psychology based on your behavior in apps, and finally your transaction data. How much have you spent in the past? What's your budgeting like? So all of this data is now being used in lending, in credit scoring, in KYC, in payments, biometric-based payments, for example. So it's quite powerful, again, in terms of data startups and database fintechs. We have come a very, very long way in terms of using that data in banks. And I actually work with a big bank, a tier 1 bank in Europe, who is using some of this data. So banks are now doing that as well. Like I said, the data is great, but what do you do with the data? That's the most important part. And what you do with that data is, again, what kind of infrastructure do you have? Are you hosting it? Are you on cloud? And if you're on cloud, you have opportunities to do selfie-based onboarding instead of just a static photo. You can use biometric face mapping. There are companies that now scan your face as you walk in and you pay with your face. Amazon Fresh, for example, you walk in, walk out. You don't have any checkout counter. Authentication without a password. So all of this can be done because you're using big data on cloud. Not able to do that in the past with traditional banks and on hosted solutions, but now we can. So why, to summarize really quickly, why do we need entities to come together? Like I said, traditional banks are struggling to survive with their revenues, the profitability, and fees. They need partnerships. Fintechs also struggle to survive. A lot of them have gone out of business during COVID. A lot of them need money and funding from the larger entities. They need customer acquisition from the big banks as well. And fintechs also need services from other fintechs and other companies that exist. And they're all worried. Both banks and fintechs are worried about big techs, the Facebooks and Amazons. They are very, very powerful if they decide to go into a market. They don't do it today because they don't want to be regulated. But if they do want to, they will be a big, big powerhouse to compete against. Now we have really amazing technology with AI, and I haven't talked about technology much because that's not important when you collaborate. It's about the customer. What do you offer the customer? That's what I worry about more. But we have technologies in place now to harness the power of data, big data, and bring it to the people. And the consumers want the best experience possible. So consumers want the Uber experience or the Google experience in banking. And no bank is going to be a Google. So how do you then offer that in the best way possible? Thank you so much. That was a quick overview of collaboration. My book also talks about this in quite detail if anyone chooses to buy it. We also have published a lot of reports on Latin America. It's on our website. But yes, so if any of you have questions, happy for you to ask or come to me later. Thank you very much for listening. Thank you. Should I wait for questions?
No, it's okay.
Yeah.
For the questions. ¿Alguna pregunta? Tenemos 10 minutos para preguntas y respuestas. Por acá hay una.
Hello? Great. So my question is, why do you think that either banks and fintechs are not collaborating together? I mean, if they need each other, the top 3 reasons why that is not happening right now, and what can we do for make that happen?
I think they definitely need to collaborate in my point of view and your point of view, because banks need technology and products and fintechs need customer acquisition. They don't collaborate because of one reason, which is fear. Fintechs don't enjoy working with banks. They're worried they will be acquired or the products will be taken up by banks. And banks don't want to work with fintechs because why can't we build it ourselves? Why do we need to bring in a completely different cultural entity into the company? So there's a cultural mismatch and there is a certain level of fear. But people have overcome it. I think you have a company called Quisky in Mexico. Yeah. Quisky is actually partnering with Amazon in terms of buy now, pay later solutions. So that's, again, a huge partnership that's announced this year. I think partnerships will happen, but it takes time to get over the fear. In Europe, partnerships happened 3 to 4 years after the fintech revolution. Mexico is slightly behind in terms of the number of fintech startups, so I think it will start now in the immediate future, is what I think. Yeah. But I think we have quite a few partnerships that I have collected. But yeah, I can talk about examples of partnerships. But there are partnerships in Mexico as well. Yeah.
Thank you.
Thank you.
¿Alguna pregunta más?
Hi, talking about biometrics and identity theft, what regulation is more strong in terms of data protection based on your research? Mexican law or European law?
Ooh. No regulation is good, so it's hard to say. But I think the Mexican regulation is quite solid. The best regulator in the world, in my opinion, is the FCA in the UK. And I'm not saying it because I'm based in the UK, but FCA actually launched the first regulatory sandbox in 2016, like almost 10 years ago. And they partner with the Mexican regulator, they partner with Singapore regulator. They have 47 partnerships where they give information on regulation to all the countries, including Mexico. So the Mexican regulators were in London to talk about how to do regulation. So I think the UK has been the first. I won't say the best, but they were the first. And they actually partner and give information a lot, which is a really good thing. They open up. But in Latin America, I would say Mexico is the best.
Thank you.
Por ahí hay una pregunta, si nos ayudan con el micro. Va del otro lado, ahí está.
Thank you. I have two questions. Which is a major challenge that you see for adoption in Latin American markets that have a great part of informality, especially in small and medium-sized enterprises? And what do you think about the risks in terms of also this trend, the major risk besides cybersecurity and well, those that are really easy to see, to appreciate? Thank you.
I think the biggest challenge for small businesses is the cost of transactions, the cost of payments. The moment you touch your card, you're paying money to Visa, to MasterCard, to the bank, the person who gave you the point of sale machine. You're losing 30% sometimes for a small transaction on cards. In mobile payments, you don't have that problem. So small and medium business today is very, very expensive in terms of their payments and also for cross-border payments. And it's still very, very expensive. So I think that challenge is slowly coming into the world of consumer payments with, let's say, WhatsApp payments or QR code-based payments. Very few businesses do that today. They take cash or they take card. But I think in the future, in the next 5 years, they will actually take digital payments. And that will be the main. So if you go to China today, or even India, you find that every single payment is QR code based. No one takes cards. I think the card penetration is almost zero nowadays. So every small business takes QR code based payment. So I think that is something, that cost for the small business have to go away. I think that's a big challenge. And the second challenge we will see is Mexico will have this big growth in the next 5 years, like I said, which is a good thing, but that also means failures. That means funding coming from different places, and they will fund business models that may or may not be relevant to the market, which we have seen again in other countries. And then you see a cycle of failures, and that takes the mood away from the market. So in the UK, we're seeing that now. People fund everything. Last 5 years, people were funding any single company that came up with AI, but now they're all gone bust. So it's not a good place to be from that point of view. But it's a fast-growing market, so yeah. So in order to reduce risk, for your second point, I think the best thing is to look at business models that will survive in the long term. Don't go for technology keywords like AI or blockchain, but sustaining business model and real advantage to the customer. So that's what I would say. Hope that answered your question.
¿Alguna otra pregunta? Tenemos todavía unos 5 o 6 minutos para preguntas y respuestas. Por ahí, si nos ayudan con el micro.
Hi. Do you think in the future, with all those fintechs coming up in the market, there will be eventually some kind of consolidation when they
100%.
join together and everything, and instead of being fintechs, just become regular financial institutions and just be usual business as usual, but with new companies?
Yeah, no, 100%. So there will be consolidation because the market is still small. In my UK market of 85 million people, that's a very small market, there were 130 digital banks at one point of time. Now there are 40. So banks have gone out of business because they're all targeting millennials. They're all targeting Gen Z. You can't target the same age group, 18 to 45, with every fintech solution. So you need consolidation. So what will happen is, of course, the number of startups will reduce, and those startups will become big. So some of them will get acquired and they'll become big. So I agree with you. I think in the future, we will not say, oh, that's a bank or that's a fintech. I think they will all provide the same kind of service in partnership. And embedded finance is a great example. When I get a service through embedded finance, I don't know who it's coming from. It could be coming from a bank, or it could be a mixture of bank and Uber and Stripe and fintech. I don't know where it's coming from anymore. So I think the word fintech will go away in the next 10 years is what I think. And it will just be, what did you get as a service? And the back end will be fintechs or banks or whoever. I think it'd be like opening a tap. You get water, and you don't care where the water is coming from or which company is supplying it. I think finance should be like that, ideally. It's my personal belief.
Devie, muchísimas gracias. Un aplauso, por favor.